Zenith Bank has surpassed Guaranty Trust Holding Company as Nigeria's largest lender by market cap. As at market close on December 2nd, that was yesterday, Zenith Bank had a market capitalization of 753 billion naira compared to GTCO's market cap of 724 billion. So far this year, Zenith Bank stock is down 3.23% year to date. GTCO is down 23.96. Joining us to discuss further is analyst from Chapel Hill Denham, Damilola Olupona. Damilola, thank you so much for joining us. Good morning.
Thank you for having me.
All right. So as far as, I think yesterday, Zenith Bank was up by 0.5% on the exchange. GTCO was down. What's have Tier 1 banks fared so far in 2021 on the whole?
All right. For Tier 1 banks, it's been mixed sentiment. I'll say mixed sentiment. Because we have, like you mentioned, GTCO, the likes of GTCO, the likes of UBA, and Zenith, are down on a year-to-date basis. That's looking at their share price performance.
Yeah.
But then we have two outliers. Access Bank, on a year-to-date basis, is up 6.51%. FBNH, that's First Bank, is also up more than 60%, on a year-to-date basis.
Yep.
And, that basically speaks to, the corporate actions, that have trailed 2021 and also speak to the earnings performance as well. I would like to mention that whilst Access Bank, has returned about 6.5%, on a year-to-date basis.
Yep.
When you look at the earnings performance as well, it has also moved in similar direction. The bank has grown PAT, profit after tax, this year. And I think investor interest in the stock, just mirrors the impressive earnings performance. But then for First Bank, whilst the bank has gained 60%, bulk of the investor interest, we've seen has largely trailed the corporate action, surrounding, the buying of bulk shares in the company. Just recently we had Mr. Femi Otedola, increased or ramped up his stake in FBNH, to the tune of about 5.06%. And that, in part, accounted for the impressive share price return, we've seen. But in all, for Tier 1 banks, it's been mixed. While we have some banks, that have reported positive year-to-date performance, there are some other banks as well that have reported negative.
Yeah, mixed bag. So speaking of which, so GTCO down over 23.9%. Is it what's going on? Are investors impatient on, I guess, the holdco structure transition? What could be what's happening there?
Yeah, for me, I would say it's an handful of drivers. Like you mentioned, GTB. At the start of the year, had guided to kicking off its holdco business this year. Specifically, they mentioned that the consolidation of their holdco earnings, will come in from half year. But then when half year results were released, we didn't see the consolidation of earnings. And now management had guided to consolidating earnings, further down the line.
Yep.
And I think that in part, accounts for the lackluster performance, we've seen in their share price this year. But then I think the major driver has also been foreigners, the foreign portfolio investors,
yeah.
Just selling of their stake, in GTB, in GTCO. You would agree with me that GTCO is one of the banks with large foreign holdings, on the NGX. And with the improved dollar liquidity, we've seen, largely on the back of the recent Eurobond issuance, and also on the back of the recent SDR inflow, that came from IMF. We've seen the reserves, just move higher, and the CBN, has stepped up his intervention in the market. So foreigners now have access to dollars, and they're taking advantage, to exceed some positions, in the equities market, of which GTCO, has been at the receiving end. So if you also look at the earnings as well, earnings have not been impressive this year. I think on a year-to-date basis, over 9 months, GTCO PAT, was down. I think was down about 9%.
Yeah. And then just for our viewers, that's profit after tax.
Yeah,
right?
That's profit after tax. It was down about 9%. Which is not impressive. I mean, historically, we've known GTCO to report solid earnings, but due to, the interest rate environment and how that has impacted, their investment securities book, the bank has just reported lower earnings this year. So I would say it's a confluence of factors, some of it fundamental, others, technical.
Great stuff. I'm glad you mentioned the interest rate environment. Has that, I guess, for as far as interest income is concerned for these publicly traded banks, that's been a headwind?
Yes, it has. So what we had coming into this year is, the pass-through of the lower interest rate environment, we saw last year, also filtered into 2021. So in terms of, interest income from investment securities, some of the banks we cover reported lower interest income from investment securities. And across our coverage banks, we noticed a particular trend. Most of them reclassified their investment securities book. I'm sure you would recall that sometime last year, CBN sold special bills, to banks, at 0.5%, and those special bills, were classified as fair value. As interest income, through investment securities, through fair value, on their books. But coming into this year, because those instruments are non-tradable, so we've seen most banks, just classify them as held to maturity or amortized cost.
Okay.
And that has reduced the yield on their fixed income books, this year. And, the pass-through of that, has depressed net interest margin this year. We've seen across banks, with the exception of few, most banks, have reported very low net interest margin this year, which is a pass-through of the lower interest rate environment we saw, coming into the year. But then, looking at their earnings, on a quarter-on-quarter basis, we've started seeing improvement. You would agree with me that from Q2 down to Q3, in the fixed income space, yields are somewhat higher than where they were, in 2020. And we've started seeing, income, pick up on a quarter-on-quarter basis. And the expectation is that that trend will just continue, going into the near term. So I agree with you that the interest rate environment, had a big role to play in the depressed earnings, most banks have reported.
Great stuff. Dami, we only got about 30 seconds. Despite all the headwinds, financial sector is still an attractive region, sector rather, for the exchange.
Yes, it is. On a dividend yield basis, GTCO, Zenith, and I think even Access Bank, they on a dividend yield basis, they have potential, to return double digits, for investors. And if you also look at GTCO is currently trading at a 52-week low. On a price-to-book basis, it's trading at 0.9 times, which is lower than the five-year average of 1.1 times. That just speaks to the opportunity, embedded, in the financial sector. So I agree with you that it's one of the attractive sector on the exchange.
Damilola Olupona, banking analyst, Chapel Hill Denham. Thank you so much for joining us. Appreciate your time.